Be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning. Good morning. Welcome to the first of the week. Welcome to Monday. Good afternoon if you're over on the East Coast, but morning to those of you on the West Coast. And of course, it's midday right here in Nashville, Tennessee, where I'm coming to you live. I'm Jeremy Whaley, founder of Maestro, and it's great to be with you today as we're getting into day number 15 of our Pick Winning Stocks Challenge. So we're going to be talking today about taking profits and limiting your risk as we move into the third aspect for our third week of the Pick Winning Stocks Challenge. We're moving into the third aspect of trading for a profit consistently. We've been going through our three-step blueprint, and this week we're getting into that third component, which is risk management. So welcome to all of you. It's great to have you here. Why don't you tell me in the chat where you're coming in from? Some of you are out in Oklahoma. I think we've got Greg out in Oklahoma. We've got some people in Idaho. We got people all across the country that are coming in. We got people on YouTube. We got people over on Rumble. So wherever you are, welcome. It's great to have you. And let's get started. Before we get too far down the road, what we want to do is we want to jump in and take a look over here at the market and see what's going on today. It is a somewhat green day. You should be seeing my screen. I'm going to take it full screen here, and you should be seeing my screen as we're looking at the Dow Jones Industrial Average right here. You can see it's a red candlestick, but it is a green day. We are presently up 68. That is down substantially from where we started the day. We started the day up over 400 points. But right now, the bears have come back in and kind of filling the gap in a little bit. Does that mean that we're going to end up with a huge red candle and a very scary looking day? No, it doesn't mean that. It just means that as of right now, at this moment, we have... we're up 68. As of this moment, we have kind of filled in that gap a little bit. So if you can see that, I'll draw it over here. Basically what happened is this was Friday's candle, roughly, something like that. And this morning we opened up like this and we traded and it looked a little bit bullish, but then the bears came back in, ended up with an upper shadow. And now we've got something traded all the way down here. And now it looks something like this. So that's what you're seeing right over here. There's your red candle. That's why the candle's red. People often say, if you don't know how to read your candlesticks, you might get confused because people often say, hey, I don't understand. Market's up 68 points, or actually now it's up 90 points. Why is the candle red? And the reason is because candlestick colors are drawn based on the open relative to the close as opposed to yesterday's close versus today's close. So when you look at the end-of-day ticker, such as what you're seeing over here in the quotes, and showing that we're up 88 points right now, that's 88 points higher than we closed on Friday. But when you look at the candlestick, we're actually down a few points from where we opened this morning. And so that's why you have a red candlestick. A little bit confusing at first, but once you understand it, it's not nearly as confusing. Where are we in the overall big picture here? Well, I wanted to do a little bit of kind of bigger picture discussion today. We've been talking pretty dialed in on the short-term correction that we've been going into. But I want to talk about a bigger picture, and that is I want to zoom out and look at a weekly chart. I'm going to rescale this, and I'm going to get rid of all my lines because on a weekly chart, it's just going to be too many. I draw everything on a daily chart. That's my home base. We spent Friday talking about time frames, and I use the home base of the daily chart. So if I have all these lines drawn on the daily chart, it's going to be pretty confusing and cluttered on a weekly chart. But I want to show you where we are in the big picture trend. And if you look at this, you might get a better perspective to say, okay, on a weekly chart, when we're going back several years on the big picture, this is a trend that got established in 2020 after COVID. We had an entire bearish year in 2022, and really since then, this has just been a bullish trend that's been trudging along here. Now, I can't remember if I did this with this group or not, but here is the pattern. I kind of drew it a little bit crooked there, but we're basically right in line with that trend. There's nothing so far that has reversed the big picture trend that has been in play since 2020. I know what the news media says. The news media makes it very scary. The news media likes to tell you that the sky is falling. They're total chicken littles. But whenever you look at this big picture, you realize that, okay, the trend really is still intact and things are not as bad as the media would make it out to be. Something else that the media has said, and I saw this Friday after we did our live stream, or else I would have talked about it on Friday. But something else I saw there was actually going out from the AP. So it's the Associated Press, which is terrible because the Associated Press, if you don't know, they redistribute all their news data. These are basically news feeds that they just send out to all the different news outlets. And that's why all the news reports the same stories over and over, because they're getting it from the same sources. And somebody pushed out on the AP that this is the worst market since 2008. And I just laughed at that. If you go back to 2008, this was 2008 on a weekly chart. There you go, right there. Come on. Right there. 2008 represented a 50% correction in the market, and it happened a little over a year and a half, about 18 months for the entire move. And when you look at that and you compare it to where we are right now, you have to laugh. But more importantly, is this worse than 2008? No, it's not. And is it the worst since 2008? And the answer is absolutely not. Did we just forget COVID? Did we just forget 2020 completely? And apparently whoever wrote that article for the AP absolutely forgot 2020. Or maybe they just graduated from college and they didn't actually know what happened in 2020. More likely that's it, because our news media sources and the journalists are just not that educated. Let's be honest about it. Here's where we are, folks. 2020 was a scary experience for a lot of people, and rightfully so, because it seems pretty scary. We were at that time in a very bullish market leading into it. We were up around 29,000. We'll just round it up to about 29,300. And by the end of the move, which only took about a month, by the end of it, we were down about 10,000 points to about 19,300. So 19,300, excuse me. Now, those are, I'm rounding numbers, okay? So nobody hold me exactly to the number because I'm rounding it here. But when you look at that, it was roughly a 10,000 point move on a almost 30,000 point index. So it was about a 33% correction that we had, and it happened in 4 weeks. And you can see it right here on the chart. I want to show it to you. You can see exactly what happened in 2020. All I have to do is grab the chart, bring it over, and zoom in on it. And you're going to say, oh, yeah, 1 week, 2 weeks, 3 weeks, 4 weeks, and it was done. And from the 5th week, we rallied, and we only rallied from there forward. Okay. Now, why am I bringing that up as it relates to where we are right now? Well, let me zoom back out. Let me get over to our current time period. If you count this out, you realize that we're 1 week, 2 week, 3 weeks, 4 weeks. We've had 4 weeks of kind of scariness. And if you zoom in a little bit closer here, you're going to see. Now, you know what? We can take it all the way back. Let's go come on, pen, work for me. 1 week, 2 week, 3, 4, 5, 6, 7. Let's say we're 7 weeks into this. Regardless, that candlestick formation right there, I think I mentioned this on Friday, it's called a bullish piercing pattern. On a weekly chart, it's showing up in a location that we would call a support level. And this looks a whole lot like what we saw in 2020, where people were freaking out, but we started to see the candlestick reversals coming in. We got oversold. I want to zoom out just enough. There we go. So we're back to 2020 here. Notice how far we were on our stochastics. We were roughly about the 30% range. That's exactly where we are right now in our stochastics. We actually were worse from a cycle standpoint back at the end of 2023 and in 2022. But from a flash, I'll call it a flash crash. It's really not a flash crash, but from a flash correction, we'll call it that. From a flash correction standpoint, we are actually very, very similar right now to where we were in 2020. And I'm still not that worried about it, just like I wasn't worried in 2020. But the bigger deal that I want you to understand about this, the bigger thing for you to know is we had one of our best years ever in 2020. 2020, because we use options and other things, I think it was about a 400% total account growth. So when you average it all out, 400% ROI for the entire trading account. And it wasn't a $200 account. I mean, this was a, multi-digit account. I don't want to tell you everything details about it there, but this was a lot. And, we had a lot of zeros in there, and then we 4x, more than 4x, so 400 times that, because we had about a 400 times ROI increase, I should say, for that particular year. And the reason is because so many trades were down so low, and we only went straight up from there. Okay, now 2022, that was kind of a stagnant year. We actually had a pretty good correction in there, but it was very frustrating because it was very up and down, all while moving down. And then 2023 was pretty flat, and then we had a pretty good run after the election at the end of 2023, or moving into the election, I should say, in 2024. And then we got to where we are right now. Now, is this a terminal trend? Are we in a location or terminal pattern? Are we in a location where everything is terminating the preceding trend? And the answer that I'm going to give you is I can't tell you 100% yet. There are concerning signs, but there's also a lot of signs of optimism. And I really wanted to address this today. I want to talk first and foremost about the concerning signs. There is a chart pattern here called a double top. That is a terminal pattern. And if this holds, this is on a weekly chart. If this holds as the top, and we stay below or roughly around 42,000, 42,000. If we stay below that, as long as we're below that, this trend is likely terminating. That's the bad news. The bad news is we do have a chart pattern up here that indicates that we've terminated this trend. That's the bad news. The good news is we have candlestick formations and oscillator formations that suggest it's going to look a lot more like 2020 than it is going to look like something else. And so we really are in that land of uncertainty, which is very frustrating. I know everybody wants to know what's going to happen today, what's going to happen tomorrow. Everybody wants to know the answer to that. And, if I had 100% 2020 future sight, then I probably wouldn't be here, and you guys probably wouldn't either, because we would print money faster than they can print it in Congress. But the reality is we don't know everything 100%. What we can identify is we can identify the patterns. We can see the sentiment of what's happening right now. And right now, there actually is more good things happening, in my opinion, than there are bad things. The news media would make you believe it's all bad stuff, but everything else is indicating other things. I'm going to come back into our daily chart here. And so we're back on the daily chart. I'm just going to bring your awareness to where we just were. This is the pattern that I identified as a potential double top. That is the pattern right there. This is roughly your main pivot area around 42,500. 42,000 to 42,500 is roughly where that peak is, and you can see that in there. So as long as we stay below that, as long as the averages stay red and they're trending, they're angling to the downside, we're going to assume that we're building a bearish trend. What I want to bring to your awareness here is we do have a low, a higher low, a new lower low, and depending on where we end, we could potentially have a new lower high, okay? So I think I said high. I think I inverted my words there. Forgive me. I don't know what I said. I honestly don't know what I just said. We have a lower low, a lower high. I think I said higher low, but I meant lower high. New lower low, and depending on where we go, we may or may not have a new lower high. If we have a new lower swing high and it turns down, I'm going to change pen color so you can really see this. If we have a new lower high and it turns and swings to the downside, that will be your entry for a bearish trend. That will be a full-on confirmation that the bears are back, and they're going to be back with a vengeance, and we should be looking at least 3 to 6 months probably of that bearish trend. But if we don't get the lower high, and if we continue moving back above the moving averages, and if our stochastics continues to support us moving in a bullish direction, then this may be it. I think we may be through the worst of it. And last night in my profit picks, which I did for our members over at Maestro, whenever we were looking at the individual trades, and I went through all over 200 stocks that we looked at that are set up, they're confirmed bearish. I'm using air quotes here. Can you see my air quotes? They're confirmed bearish, over 200 of them. But of those 200, I could barely pull out bearish trades simply because they have moved so far. We have so many bottoming patterns patterns coming in. And what it appears when you look at the individual trades is it looks like we're building a lot of support. We're building a lot of foundations. And I think we may be 2 or 3 weeks from the breakout to the upside. And I think there's a decent shot that this is going to look a lot like 2020. And it might be, as scared as you might feel right now, it might be that 6 months from now, 8 months from now, you're looking at 2024 and you're saying that was the greatest trading year of my life. I genuinely think there could be that much opportunity on the table. So we're going to have to wait till we get through it. It's a scary time. I get it, but this too shall pass. And when we get to the other side, assuming you're ready to trade, you jump right in there and you start jumping in, riding those bullish trends on the backside up, and there'll be a lot of money to be made there. Okay, so that's my message of encouragement today. There's all my lines, so you can see the slop. It's not sloppy at all. It's very defined, but you can see where everything is stopping in here a little bit better. Sometimes it's useful to have all the lines. Sometimes it just becomes overwhelming. So I like to turn them off from time to time. Here's your S&P 500. Same story as I've been saying all week last week. It's the same song with a slightly different verse. We've got continuing to bounce, continuing to do the counter move back to the upside here. The big question is what's going to happen right here? Do we put in a new lower high, or do we just start to establish this, actually put in the reversal? And is this the new buying opportunity that will be setting us up for later in the spring, moving into the summer? That is the big question that we've got to get answered. And, it's going to be a couple days. It's not going to happen all overnight here. I would expect right now, this is what I told my Profit Picks group last night, I would expect another week of pretty good volatility. We do have a shortened week. Friday is Good Friday, so we will not have all 5 days of trading this week. But I would expect more volatility. I would expect more intraday volatility. The last thing I want to show you, for those of you who know what the VIX is, we're going to pull up the VIX right here, and I want to show you a couple of interesting things on it. Number one, it is only going down. It is only going down right now, and that is a sign of lower volatility. That is a sign that things are stabilizing, and there you go. There you can see it. We did have a huge spike in VIX, peaking up here around 60. But it is only moving to the downside right now. And as I was saying, that is a sign that things are stabilizing. If you've been paying attention to the other news stories, not the ones that they want you to hear, but if you've been paying attention to the other news stories, I actually think the very thing they're blaming, which is President Trump and the tariffs, I think that they are working, because we're seeing a lot of countries completely dropping the tariffs. We're seeing prices actually coming down in the United States from both imported items and domestic items. And I do think that this strategy is working. So the news media wants you to believe that the sky is falling. Don't be a Chicken Little. Don't fall for it. Sky is not falling. There's really great things happening, and that's all there is to it. Let's look really quick here. I'm going to assume some of you guys want to see crypto, so let's look really quick at Bitcoin. Bitcoin is desperately trying to put a foundation in here. Really, really hard. Our best support, I think I said this last week, our best support's around 71, almost 72,000. That is our best support area in here for Bitcoin, but it is trying so hard with a vengeance to put a support in here more close to 78,000. We'll see. This is not an established pivot area. It's not an established pivot area, but it's trying to. And remember, every pivot at some point is new, right? So sometimes, we're dealing with getting turns in here in a new price range that becomes a new future pivot. But at the moment, 78,000 has not been the pivot range. It's been closer to 72,000. So I would actually feel a little bit stronger if this went ahead and dropped down to 72, but we may be where we are. And honestly, if it builds from here, I think it's actually a bigger sign of strength, because it couldn't get all the way back down to the previous pivot area. It couldn't get all the way to support. Instead, it rallied early. And that's actually a sign of strength. So I know a lot of you are scared. I know a lot of you are like, oh my gosh, it went down so much. I bought it 108. Why did I do that? Look, hang on. This too shall pass. Don't be a hodler. Learn how to do it right the next time. But, in the short term here, I do think it's going to come back, and I think you'll be all right. That's my update on Bitcoin. Let's see. Ethereum, I don't have as much optimism on Ethereum. Even though I really like Ethereum, it has not even started to put its foundation in, and it's really adjusting where it's going to call home base. So we're just going to have to wait to see on Ethereum. XRP kind of putting some base in here around 180. XLM working around the 24-cent mark right now. I like XLM better at 18 to 20 cents for a support, but maybe it builds it right where we are. The biggest one right now that I'm excited about that I feel like has not just reached its foundation, but is starting to make its turn is Solana. That's SOL, for those of you who are looking it up, SOL USD. Solana is back down to the 130 range. It has not only landed on our support, it has put in a new lower low and has bounced off of that. It is clear that it is building a solid support right here at this support line. This is a known support level. It is absolutely what you're wanting to see. Let's see if I got my MACD on here. I do. It's right here. And one of the things that you're going to see in the MACD, for those of you who know how to read this is going to make sense. If you don't know, just hang with me and I'll teach it to you. Right here, you are seeing lower lows on the crypto. You're seeing higher lows on the MACD. That is a term that we call bullish divergence, and that indicates the end of that bearish trend. I am the most optimistic of all the cryptos right now. I'm most optimistic that Solana is putting its foundation in. That doesn't mean it's time to buy. It very much means it's not time to sell. Very much means that we're putting a bottom in, it looks like. Don't be surprised if we put another big test in here and then rally. That could take another 3 or 4 or 5 weeks. In fact, if we did what I just drew, it is actually a chart pattern known as a inverted head and shoulders. If it were to do that, and that is also a terminal pattern that would suggest that the trade has terminated the preceding bearish trend in this case and is reversing to the upside. So I actually think there's a lot of great things happening right now in the market. I'm not terrified. I'm never terrified, but I'm not that pessimistic either. I do see that there's some yellow flags. I think there could be some problems moving forward. But unlike a lot of people that are out there just spreading fear and getting clicks because of the fear, I'm not overly concerned. I'm not saying don't be cautious. Actually, let me be very clear. Since a lot of you may be watching and don't quite know where I'm coming from, I'm not worried that we're getting into like a long-term bear market right now. That's what I'm not worried about. I've been very, very clear that we have been bearish. I've been very, very clear that my Profit Picks group on Sunday nights, they knew to not be bullish all the way back here at the end of February and early March. So we've basically avoided all this bearish pain. So I want to be very clear. I'm not saying, oh, everything's good, just buy and hold. I'm not saying that. I am calling it day to day like I see it. And what I'm saying is I don't think that the media who's spreading all this recession fear, I don't think that they are accurate. But there's no question the market has obviously sold off. There's no question we were prepared for that. So I want to be very clear about that part. But I'm just saying I'm not sure right now that I can buy into the long-term recession narrative. Again, what I'm looking for, do we rally back up to roughly 42,000, put in a new lower high and turn to the downside? If so, I'll probably be sitting here saying, all right, folks, hang on. We're looking at a bear trend. But right now, I think this is probably just a correction. And I think that we're probably in pretty good shape moving forward once we can get this bottom in. All right. All right. Hopefully that made sense to everybody. And I have clarified everything. If there's any questions, type it in here to the chat. Type it into the chat. And I will be happy to answer it and move on from there. I don't see any questions yet, but let me check over here on Rumble. For those of you that are tuning in on Rumble, how you doing? It's great to see you. Those of you on Facebook, I hope you're doing fantastic today. I think we're on Facebook. Apparently, I never pulled it up on Facebook. Let's make sure. Yes, it says we are live on Facebook. Fantastic. Howdy-ho, neighbors over on Facebook. Let's see. What else do I want to say before we move right along here? I don't have any questions here. I must have said everything as clearly as I could have said it then. I said last week I was going to make a big announcement today. I am. It's not quite as big as I'd hoped. I'd planned, well, it is a big announcement. My intention was to have a video put together to make this announcement. And many of you know that I coach baseball for my kids, specifically my middle school son. We had a tournament this weekend. We did 9 games in 3 days, and I was unable to get a video produced. So whenever I do announcement videos, I put some pretty good production effort into them. And I was unable to do that for today. And I'm disappointed that I didn't get to do it. I had high hopes for myself, and I failed. But I'm still going to make the announcement and let you know what's going to happen. So I started doing these live streams every day. This is week 4. This is the 4th Monday in a row that we've done this. So we did it at the beginning of April, middle of March, I guess it was. I don't know. We'd have to count back. But this is the beginning of week 4. We did a week, and then we jumped in Pick Winning Stocks Challenge. This is beginning of week 3 for Pick Winning Stocks, so it's beginning of week 4 overall. I was kind of just testing to see if it would be interesting, see if people were interested in it, see if we could get attention, yada, yada. And I committed I would do it for a month and see where we landed. Well, we've had really good feedback, and I want to keep doing it. So hopefully that's good news for you guys that are listening. We don't have a ton of you listening, but we are getting a lot of replays, and I'm getting a lot of response from people. So I think it's doing what we wanted it to do. Obviously, I'm not going to just sit here every day and teach through my courses, especially the premium courses that normally are reserved for my members over at Trade Maestro. So what I'm going to do is we're going to actually develop this and turn it into a show with a very similar format to what we're doing right now, but it'll be a slightly different. Instead of teaching through a course, every day will be able to stand on its own. So if you miss a day, it's not the end of the world. We're going to keep the teaching segments to roughly 15 to 20 minutes every day. We'll keep the same format where we do the market update. We'll do a core teaching, and then we'll open it up for Q&A at the end. And the ideal is that we'll get our show down to about 45 minutes to an hour every day. That'll be the intention. Okay. So you say that doesn't sound a lot different than it is right now. It's not. It's actually a very similar format, except for right now I'm teaching an actual course from my membership area. And in the future, I won't be doing an actual course. I'll just be doing little snippets. All right. So that's the first part of the announcement. The second part is we got a name for it. And starting after Pick Winning Stocks Challenge, when we come back, I'm going to actually name our show. And the name of our show, ready for it, drum roll, is, it's going to be Wall Street Secrets Live. So what I'm going to be sharing with you are secrets for trading, secrets for maximizing your operations that you're doing in the market. And I'm going to be just kind of pulling the curtain back and sharing all the stuff that I've learned over the last 20 plus years of trading and working in the market. So Wall Street Secrets Live. And you might even read into that might be leading into a book and some other creative assets that we've been working on in the background as well. But I'm not announcing that. I'm just kind of saying it might be happening. Anyway, that's where we're going to be going. That was my big announcement. Unfortunately, like I say, I didn't get the video produced, but I'll get one done. And starting up here in a week or so, we will be launching Wall Street Secrets Live as the next iteration of this. So I think it's exciting, and I think you're going to love it. Kenya loves it. Thank you, Kenya. Appreciate that. Hello, Bill from Kentucky. How are you doing? Bill always says Bill from Kentucky because Bill's been around me for a long time, and I always think he's from West Virginia, and he's not. He's from Kentucky, but he's close to West Virginia. It's just that somehow my brain linked up he was in West Virginia instead of Kentucky, even though he's in Kentucky near West Virginia. So he always puts Bill from Kentucky. That's why he says that. All right, folks, let's jump in and get into day number 15 of our Pick Winning Stocks Challenge. Oh, that was one more thing I wanted to announce. I had, it's been a while since I taught this live and sessions live, and I said, this doesn't even need to be done live. I forgot what I had done in the past, and I'm going to do it again. What the weekends are basically a recap and then bonus material, and it's not enough to justify a whole live session. So what I'm going to do is I'm going to record those and send out the bonus session for strategy for last week. But to make sure that all of you get it, you need to be on my mailing list. And if you're not on my mailing list, then shame on you. So I have put a link in the chat. It is a pinned message, and it says, want a simple roadmap to smarter trading, smarter trades? Download the ultimate trading cheat sheet. If you click on that, if you're on my mailing list, you don't have to do this. But if you click on that, it will take you straight to the website where you can sign up to get the PDF cheat sheet, and it will put you on the mailing list. And then when I send out the bonus video, you'll get it. Okay. So there's one session. One session was just a review of last week, and then one session that I would normally have sent out on Sunday is a bonus session, and I need to send that out, but I wanted to give you guys a chance to make sure you were on the mailing list. All right. So that's where day 14 went. That's how we landed on day 15, which gets us into taking profits and limiting risk. One of the most important things we will discuss in the world of trading. I want to remind you, this Pick Winning Stocks Challenge, it's more than just, a challenge. Yes, it is a challenge. I want you to be here. I want you to, start getting progress with your trades. but it is actually an in-depth training walking you through the 3-step formula for how you make a profit in the market. It's an unbelievable value I'm giving you, and some of you recognize that. Some of you are kind of like dabbling. You're not quite sure if you really believe it yet or not, but let me walk through the formula with you, and I'm telling you right now, what I've been doing for the last 3 weeks is going through this 3-step formula. So step 1 is identify the trade direction. Step 1 of the formula is do your analysis and identify the direction of the trade. Step 2 is apply an appropriate strategy. And step 3 in the 3-step formula is to use good risk management. Now, here's what we have been doing. If you are tracking the formula and you're kind of following along, 2 weeks ago, we spent the entire week working on analysis. That was step 1, identifying the trade direction. Analysis is the process of looking at a chart, looking at a stock, looking at a crypto, whatever it is you're trading. The analysis is the process of looking at that and identifying the most probable next direction for that trade. That's the analysis part of the technique. Okay, that's the most important part of trading. The majority of your money is going to be made in doing the right analysis. We spent the entire first week talking about that. Step 2 is applying the appropriate strategy. That's what we spent last week focused on. So 2 weeks ago, we spent the entire week focused on analysis. That's step 1 of the formula. Last week, we spent the entire week focused on strategy. That's step 2 of the formula. This week, we're going to spend the entire week talking about risk management. That's step 3 of the formula. And I'm going to give you a guarantee. There's not a lot of guarantees in the stock market, but I'm going to give you a guarantee. If you will follow this formula, you will eventually see your equity curve going up. Now, there's obviously lots of nuances within each step, but this is the formula, and I can absolutely guarantee that. If you pick the right direction, you apply the right strategy, and you use the right risk management, you're not going to win every trade, but you will, over time, see your equity curve going up because there's a formula that's at work here. And the most important part of making that formula work is actually this part right here. It's the risk management. The money's made in the analysis. The money is kept in the risk management. Okay, so let's jump in. What is risk management? What is risk management? Risk management is how to not go broke. Period. Yes, I stopped talking there because I want it to land. I want it to leave an impact for you. Risk management is how to not go broke. Trade management is how you manage the individual trade. Risk management is how you avoid going broke. You've heard me tell my story. The first 4 trading accounts that I managed, I blew up. And I don't mean I lost some money. I blew them up, took them almost to zero. Some of them were big. Some of them were not as big. Took them all to zero. And I did that because I had no clue of the risk management piece, because in all the literally $45,000 worth of trading education that I paid for while I was learning how to trade, and the literally almost 100 books that I had read on the topic, and all the trades that I had done, the live courses I had gone to, the DVDs that I had watched and had purchased, all of that, no one ever talked about risk management. I found it in a small book by a guy who died literally the month before I found his book. Crushed me. I found his book. I was so excited. I was like, I'm going to go get to know this guy. And I found out he had just died. Risk management is how you avoid going broke. Since I did that, since I found the topic, found the formula, I've never blown out a trading account. But I was blowing them out like eating candy before that. That was a rough analogy. Metaphor. Analogy. One of you English majors can correct me if it was metaphor or analogy. But all right, so how do you not go broke? That's what risk management is. Trade management with an emphasis on protecting capital. Trade management itself is how you manage the trade. Trade management with an emphasis on protecting your capital is risk management. Here's the truth about trading, folks. You ready? In stocks, there is no free lunch. This is the Pick Winning Stocks Challenge, so it says in stock trading. In crypto trading, there is no free lunch. In options trading, there is no free lunch. You can plug in whatever market you're trading. There's no free lunch. Market's going to punish you if you're sloppy. That's why I'm so adamantly, philosophically against hold on for dear life. Buy and hold for dear life. I am philosophically against it because I've watched so many people get so hurt. When we ask the question, what is investing? Investing is the process by which an entity, that would be you, places an asset, usually a monetary asset, into an enterprise, a business, with the expectation of a positive return. That's what investing is. A person or an entity, could be a business, could be an individual, but a person places an asset into an enterprise to be deployed for use with an expectation of a net positive return. That's what investing is. And I say it's usually monetary because sometimes you invest in ways that's not monetary. You might invest time. Could an entity invest their time into an enterprise? Yes. Can you do that with an expectation of a net positive return? Yes. Could an entity invest equipment or invest other assets that are not necessarily monetary assets? Could you invest that into an enterprise with an expectation of a net positive return? And the answer is yes. Let's say, hypothetically, we'll just use a example here. Let's say that you have a child and your child, maybe they become an adult and they want to start a lawn mowing business. That's an enterprise. And maybe you happen to have an extra lawnmower in your garage and you say to your child, hey, I will give you access to this piece of machinery. There's an asset. A piece of machinery is an asset. I will let you use the piece of machinery for your business, and you can give me a piece of your upside. That would be an example of an entity, you, investing an asset, the piece of machinery, into an enterprise, the yard business, in expectation of a positive return, but it's not monetary. So you get the idea. The function of investment is for a person or a business to place that asset into the enterprise for positive gain. Here's the misnomer. The misnomer and the lie is that investing is safe. Look, I'm not going to sugarcoat it. There are literally probably 5 million people on YouTube and Twitter and social media all around the world telling you, hey, if you just do this, you're going to become an overnight billionaire. I'm not going to lie to you. That's probably not how it's going to happen. I talked to a guy on the phone on Friday, and I think there maybe had to be some adjustments of what expectation would be. The whole idea of the Wolf of Wall Street, making millions and billions of dollars the moment you start trading, that's not going to happen for most of you, not because you're incapable, and it's not because the market can't produce it. Most of you don't have the capital to make that happen. There's a big difference if you're working for a big firm and you're putting $100 billion into the market. It's a lot easier to pull out $1 billion. That's a 1% move. But if you have 100,000 you put in and you say, well, I only made $1,000. Well, guess what? It's the same 1%. So the misnomer is the expectation. And there's a misunderstanding of what investing actually is. There's a misunderstanding of how safe it is. There's a misunderstanding of what your returns should be and what makes sense. Crypto, those of you who trade crypto, I don't know who's watching that's crypto trader, but if you trade crypto, I would say there's more misunderstandings about what you're going to get from crypto than any market I've looked at in my entire career. Okay? And I get it. I mean, I was a beginning trader. I know exactly what it's like. I remember diving in and thinking, oh, if I can just buy this video course, then I'm going to make, $900,000 next year. So you go buy the video course, you spend $3,000 or $4,000 on it, you watch it, and you're like, I still don't know what I'm doing. I get it. I did that too. Okay. But when you're looking at crypto, the big misnomer of crypto in particular is people say, well, if you just buy crypto and you just hodl it, it's going to go up. Well, ask that to the millions of XRP investors who have been buying XRP. Every time it starts to move, they jump in and they're hodling, thinking that XRP is going to be $100 a token or that it's going to be worth more than Bitcoin. I mean, I use XRP because it's got a cult following. And poor XRP investors just been hanging on for dear life and finally got a little bit of reward last fall. And now it's lost a third of that. They're sitting here saying, how much longer? How much is the pain got to be? Because the misnomer is that investing is safe. Our desire looks like this. Our desire is that we would make lots of huge amounts of money trading the market. And in the process, we would have little or no risk. That is the desire. But the reality is most people are so afraid of losing money that they end up doing everything they need to make sure that they actually lose money. Yes, that I literally read it exactly like it is. Most people are so afraid of losing money that they do everything they have to do to actually make sure they end up losing money. It's the law of attraction. The thing that you focus on the most, where you put your energy, where you put your attention, where focus goes, your energy flows. If you put your focus on, oh, I hope I don't lose my money, guess what's going to happen? You're going to lose your money. I'm going to tell you a story. And I'm telling you the story because I want you to be like one of these traders and not like the other. I'm going to tell you the story of two traders, my students, that came to my second class that I ever taught in 2009, March 2009. First class was in February 2009. Second class I ever taught was in March 2009. And these two traders both signed up for the same course at the same time. And they sat through the same course together, live teaching similar to this, at the same time, with the same teacher, with the same presentation. One of those students graduated from the course 3 months later. About 6 months after that, he came back, wanted to do some private coaching. I started coaching with him. He was already making money, and he wanted to come do some coaching to maximize his profits, and he made over 6 figures his first year of trading. His trading account was modest. I'm going to say 25, maybe 30,000. Not too big, not too small. The other trader, we'll keep her name silent. We'll call her Trader 2. She came through the same courses as Trader 1, did the exact same process, graduated in 3 months, actually continued to do retakes of the courses. A year and a half later, comes back and wants some private coaching, could not figure out why she couldn't make any money. We did some private coaching, did a couple of sessions. We only did 2 because she quit on me. But we started doing private coaching sessions, and what I discovered, and this is actually where I learned a lot about the mindset of trading, was with these two students. What I discovered is student A had a belief that she was going to lose money. And did I say student A? Student B. Student A, the guy, he had a belief that he was going to make money, and it was internal for him. He believed it so deeply in his core that when he would have a losing trade, he flushed it and he moved right on. But the girl, she was so afraid of losing money that when she would lose money, she would sit there and overthink it. And why did this happen? I can't believe I lost more. I can't believe this happened. And next thing you know, she lost money again. And then she lost money again. And then she lost money again. And she kept just whittling away on her account and whittling away on it, because up here, she had a different expectation of herself. It was an identity issue. That was actually the story where I started to really dig into trader psychology, because I asked the question, how can trader A go out and make 100 grand? Actually, it was much more than that, but how can trader A go out and make 6 figures in the first year and trader B can't make her first $1,000? And what I discovered is it was a different aspect. It's the only piece beyond the formula. The formula is rock solid. Do the right analysis, apply the strategy, do the risk management, you're going to make money. There's a fourth piece, and it's the intangible one, and that is the mindset. So I'm bringing some of that in here, okay? What we've discovered is most people are so afraid of losing money that they end up doing everything they actually need to do to make sure they actually lose some money. So here's the rules. Rule number 1, very rarely, very, very rarely will a trader get in at the very bottom or out at the very top. So quit trying. Let that go. Just don't even think that it's possible. Let go of an unrealistic expectation. Guys, you're probably not going to marry a supermodel. Don't expect every woman to look like a supermodel. Ladies, you're probably not going to marry Fabio. Don't expect it. And when you trade, don't expect that you're going to get out at the very top, and don't expect that you're going to buy at the very bottom. It's not reality. Sometimes it happens. but it's a very distant outlier. We're not even talking 1%. We're talking a fraction of 1%. A fraction of 1% of the time will you actually get out at the very top or get in at the very bottom. So don't expect it. And don't punish yourself when you don't. It's unrealistic. Rule number 2, you can't go broke making a profit. I have traders that are afraid of closing their trades. They get into a trade, they have a profit. Some of these traders are trading options. They'll have 100% or 150% on the capital that they put into the trade. But they didn't put much in it. They put like $1,500 in it. So now they have a $1,500 profit. And they're sitting here saying, well, I think I can make more. And they hold it and they hold it and they hold it. And they end up closing it for a $200 loss because they thought they could make more. You can't go broke making a profit. Quit trying. Quit trying to maximize your results so much that you end up hurting yourself in the process. Rule number 3, when you get to a reasonable target, it is reasonable to take your profits. When you get to a reasonable target, it is reasonable to take your profits. What is not reasonable is to keep hanging on for dear life thinking, maybe this is the jackpot. If I hold on long enough, I'm going to be a lottery winner. The best traders in the world are disciplined traders. And I'm going to speak specifically to my crypto fans. I love cryptocurrency. Cryptocurrency is one of the greatest opportunities in the financial markets of the last 200 years. Maybe ever. Crypto is extraordinary. It is so good that it often rewards bad behavior. Crypto is such an explosive opportunity that even those of you who break all the rules oftentimes get rewarded. And that is the worst thing that can happen. Bill Gates once said the worst thing that can happen to an entrepreneur is they have success in their first business because they think that they're really smart and they have no clue what they don't know. And that's what I say about traders. The worst thing that can happen to a new trader is they go out and double or triple their money in their first few trades because they actually think they're good and they don't have a clue what they're doing. Crypto has rewarded bad behavior because it's such a great opportunity. And I think I've told you my story of my client, my coaching client, who went out and made 7 figures in Bitcoin and then lost almost all of it because he didn't know what he was doing. But for the year and a half while he was raking it in, he thought he was the stuff. He thought, man, there ain't nothing I can do wrong. And his story is the exception, not the rule. You say, how's it the exception? Because he came and got help and now he's rocking it. But most people, they just say, oh, crypto's just volatile. You just got to hodl. Hold on for dear life. How many cycles of 100, 200% up and 50% down do you have to suffer through before you realize that buying and hodling is an emotional roller coaster and it's not a strategy? I love crypto, but I really want my crypto traders to learn these principles because it's going to transform you. Crypto will give you incredible profits and incredible opportunities. But that does not replace the need to become a disciplined trader. So here's the rules. Rarely will a trader get in at the very bottom. Rarely will they get out at the very top. You can't go broke making a profit. When you do get a reasonable target, when you do get to a reasonable target, it is reasonable to take your profits. Next rule, you ready for this one? You should write this one down and put it on a tattoo and have it put on your arm. Or maybe your forehead. If you're stubborn and you only look at yourself in the mirror, have it put on your forehead. Pigs get slaughtered, so don't be a pig. In Wall Street, there's a few animals that are associated with trading. One is the bull. The bull attacks its victims by putting its head down and driving up. So we say that bulls are running, the bulls are driving the market up. Bears attack by standing on their hind feet and pulling down. So when there's a bear market, the market is falling, it's coming down. Those are the two main animals associated with Wall Street. But there's 2 more. One of them is the pig. And the pig is greedy. And on Wall Street, the principle is this: pigs get slaughtered. Pigs keep holding on thinking they can get more, and they end up losing everything. Now, there's another animal associated with Wall Street. Do you know what it is? You have the pigs. Pigs get slaughtered. The other animal gets slaughtered on Wall Street is the sheep. And the sheep is so scared to trade that they still get slaughtered. So pigs get slaughtered and so do sheep. You say, should I even trade? Yeah, you should trade. You just got to learn how to do it. You just got to learn how to be a disciplined trader. Disciplined traders slaughter the pigs. Disciplined traders take advantage of the sheep. Because here's how it plays out in the real world. In the real world, what happens is pigs hang on so long that they end up losing everything as the cycle goes back to the bottom. 2 weeks ago, we talked about trend cycles and we talked about market cycles. So you understand that the market's moving through cycles and it goes up and it comes down. You understand that. Pigs get slaughtered because when it goes up, they keep hanging on and they double down and they buy more and they buy more. And then they hold on all the way back to the bottom and they end up losing everything. Sheep, on the other hand, are so afraid that they do not buy until we're at the top. And the sheep buy at the top thinking, okay, now it's safe. And that's when the cycle pushes everything back to the bottom and they get slaughtered too. You don't want to be a pig and you don't want to be a sheep. Be willing to take the risks, but be disciplined enough to manage it. Be willing to take the risk, but be disciplined enough to manage it. All right, so let's talk about a little bit of Trade Management 101. We're going to be talking about risk management all week. It's going to be great. Okay, but Trade Management 101, here we go. Number one, have a plan. Before you get into your trade, have a plan. Number two, make your reward bigger than your risk. Make your reward bigger than your risk. Number three, position your sizing relative to your account. Just because you can afford to do more doesn't mean you should. You have to position it with a relative risk. And then when you're done, you scale the risk. You can't start with putting your maximum risk on the table. One of the reasons I lost money early on, you've heard me talk about it with the margin, that very first account, once I had a little over $2,000 and I could actually buy on margin, I bought everything I could on margin all in one trade. That was foolish. I took on more risk for one trade than I could justify, but I had no idea. I didn't know because nobody taught me this stuff. And so I was using leverage and bad risk management. And I got slaughtered. I work with traders who, when you deal with options, you often will do this. When you deal with options, the biggest reason people lose money with options is not because options are risky. I'll kind of go on a tangent here. I got a lot of traders that I coach on options. And the biggest reason people lose money on options, number one, they don't know it. They don't understand them. That's the biggest reason. But number two, it's because they don't understand the risk piece. With options, you have so much leverage, you have to manage the risk different. So it's a lot like trading Forex. With Forex, you have so much leverage, you have to manage the risk different. The principle's the same, but you got to understand what you're dealing with. So with options, one of the big reasons people will lose money, and they'll lose a ton of it, you know, if you were to buy $100,000 worth of stock, let's say you had $100,000 in your trading account. Now, let's not do that. Let's say you had $10,000. So you have $10,000 in your trading account and you want to buy $10,000 worth of stock. You buy it. Stock goes down 10%. You sell it. You lost $1,000. With an option, if you were to take the same stock trade with your same $10,000, you can get $100,000 worth of stock. Stock goes down 10%. Problem is you just lost $10,000. You lost everything. So that's how the options get skewed. The same percentage loss for an option will take out a lot more than it will if you're just trading direct stock. Okay, so that's why. So the risk is really, really important in managing that type of stuff. Let's talk about your trading plan really fast. I said you got to trade with the plan. Number one, a trading plan has 3 prices that matter. Write these down. If you don't know these, write them down. This is gold what I'm giving you. You have your entry, you have your target, and you have your exit. or your stop. Now, I'm going to say this really, really plainly. I've said this a million times. If you've heard it, I'm just going to repeat it. If you've never heard it, whichever arm got the first tattoo, tattoo this one on the second one. If you do not have these three pieces of information, you do not have a trading plan. And if you do not have a trading plan, you are planning to fail. You must know your entry price. You must know your target. You must know your stop. Your entry is where you're going to enter the trade. Your target is where you're planning to get out. And your stop is where you plan to get out for a loss. So I don't want to get out for a loss. I don't want you to get out for a loss. But you need to plan for it, worst case scenario. Now, there's one strategy, there's one scenario that I actually will walk my students through where you enter with a specific price and you have a stop, but we have an undefined target. There's only one scenario where I do that, and I'm not going to get into that with you right now. But every other scenario, always have your entry, always know your target, and always know your stop. So I'm going to give it to you right now. Here's how it works. Your entry price is the price that you enter the trade. Your target is where you plan to get out and take your profit. Your stop is where you plan to exit and take a potential loss. Now, once you know those three price points, you can draw your trading plan. The difference in your entry and your target is your reward. The difference in your entry and your exit or your stop is your risk. And now you understand what I mean when I say your reward must be greater than your risk. Your reward is the difference in your entry and your target. Your risk is the difference in your entry and your stop or your exit. Notice it's not the amount of capital. It's the amount you're planning to risk. And I'm going to go on one more tangent here related to this. Do you realize, statistically speaking, you have a 33% chance of making money when you trade? Just flat statistics. Stock can go up, it can go down, it can go sideways. Crypto can go up, down, sideways. 33%. That means you have a 66% chance of the trade not doing what you want. How many of you, before you get into a trade, think to yourself, I got a 66% chance of this trade not working. I should plan for that. And the answer statistically is 0 of you plan that way. Yeah, maybe 1 or 2 of you do, but most of you, statistically speaking, do not plan for the loss. That's why when the loss happens, we get shocked. We get shocked emotionally. I couldn't believe it. I thought for sure this one was going up. And we get shocked in the trading account value because we never planned for it. But if you plan for the risk, if you plan for the loss and you know your numbers, statistically, you will outrun it because you planned for it. That's part of the risk management piece. Now, I'm not going into all of that today. We'll talk more about that later in the week, tomorrow, Wednesday, Thursday. But this is the beginning of it right here. The beginning of it is to understand you have to have your entry price, you have to have your target, and you have to have your exit price. And statistically, 1 or 2, maybe 3 of your trades will get all the way to your ultimate target. Usually, 2 or 3 of your trades will stop out for a loss, either a complete loss or at least some loss. And about 5 or 6 of your trades will get somewhere in the middle. And if you follow the formula, over time, your trading account will go up. Over time. But you have to understand what we're working with. We're working a formula. And that's why it works, because it is a formula. But it's not random. It's not gambling. We're not just throwing stuff at it. So here's the key takeaway for today. 1/3 of trading is management. 1/3 of trading of successful trading is managing the risk, managing the trade. Analyze the trade, that's 1/3 of it. Apply the right strategy, that's 1/3 of it. Do the risk management, there's your last third. 1/3 of the 3-step trading blueprint is risk management. Second takeaway, don't be shy, and also don't be greedy. The third takeaway today, have a plan. If you're not planning your trade, then you're planning to fail. Next takeaway is manage your risk. And if you will do these things, you are once again moving the needle so that you are giving yourself an edge in the market. You don't have to be a top 1% trader to make a really good income. But you do have to have an edge. If you're just out there throwing a dart at the crypto, throwing a dart at the screen and picking your crypto, picking your stock, picking whatever it is, statistically, it's not going to work very well. But if you build the right formula around it, even if you just randomly picked, you could still actually win. That's the crazy thing. So that's what we're working on. All right, folks, that's what I got for you today. I hope you got some good stuff out of that. If you got any questions, type them in here. Let me know what your questions are, what your thoughts are. If you have not followed the channel yet, if you've not liked and subscribed, then please do so. Turn on your notifications so that you get the alerts, because we're going to go live tomorrow at noon Central Time. That's 1 o'clock Eastern. It's going to be 11 o'clock in the mountains, 10 o'clock on the West Coast. And if you're anywhere other than the continental United States, you can do your own time zone conversion, because I'm not going to do it for you. But if you haven't liked and subscribed, do so. Like and subscribe. Follow if you're over on Rumble. Ask any questions you got here. I want to thank you guys for being here today. I appreciate you. Review this video if you need to. It'll be up for a little bit till I take them down. Review the video if you need to do so. And come back tomorrow, because we're going to keep digging into the formula. I'm going to go more into the risk reward with, making more than you're putting at risk. We'll go deeper into all of these aspects, but you don't want to miss it. So like and subscribe, turn on those notifications, and plan to be here tomorrow. I don't see any questions coming in other than Christina says she always loves the live teachings. Thank you, Christina. Appreciate you being here. And I got... let's see. I got a comment over here on Rumble, but I can't see it because it's covered. Zeus is here. He says he couldn't make the last couple shows, but he's back from South Dakota. Thank you, Zeus. It's great to have you. It's great to have you. All right, be sure to sign up for the mailing list. Click on that link there in the chat. Click on the link. Go over, download the cheat sheet so you're on the mailing list, and that way I can send you the bonus materials as well. And until next time, I wish you guys the best. Happy trading to all of you. We'll see you tomorrow. Until then, have a great day. Talk to you soon.